This is FinTech Takes, the podcast keeping you in the loop on all the latest FinTech trends, news, and ideas. I'm Alex Johnson, creator of the FinTech Takes newsletter, your host and self-confessed FinTech nerd. Let's go! I know that here on the show we talk a lot about the importance of bank partnerships when it comes to the success of any type of embedded finance or fintech endeavor. So let me tell you about a provider that is raising the bar in embedded finance. Built by Fifth Third Bank, Newline enables enterprises to launch and scale payment products using their API-first platform, enabling embedded solutions that scale responsibly. Learn more about Newline by visiting newline53.com. Hello, and welcome back to Not Fintech Investment Advice. My name is Alex Johnson, and I am here with my fellow Not Fintech investor, Simon Taylor, author of Fintech Brain Food. Simon, great to see your face again.
It's great to see your face, Alex. It really is. But you're in a new place. Well done for surviving a house move. That is a difficult thing to do, sir.
Thank you. My time this morning was set up mostly around like configuring all the inputs and outputs. And I used to have a simpler setup, man. I used to have just like a laptop and it was easy to move around. But now I've got microphones and receivers and cameras. And so making sure everything was working did take some time, but I'm glad I'm coming through clearly. Am I coming through clearly?
Just about. It's lifestyles of the rich and famous. Perils of being a celebrity, my friend. The nicest guy in fintech also has the most equipment in fintech to set up to record his podcast. It's the whole thing.
Well, I feel like you rival me both on the nicest guy in fintech front, as well as I know you have a pretty impressive setup there as well. Speaking of which, Simon, plug the new thing you're doing before we dive into today's episode.
Yeah, with Rex, we're doing Rex Salisbury. We're doing a weekly series on YouTube. So you can find it just by searching on YouTube for Rex Salisbury, and it's on his channel. Where we're just talking about 2 or 3 things that are top of mind that have happened in the news, and just chatting about it, really. So yeah, head to YouTube, look for Rex Salisbury, and you'll find us. With the first one we did was on, is KYC properly screwed? I think it is. Frankly, digital KYC, like Gen AI, just beats it for fun. The big insight there was like, yeah, because industry operators are actually starting to say, no, we're seeing these masking attacks now. It's not just like a headline. It's not just a thing. So yeah, check it out. Thanks for the shout out, Alex. Thank you, sir.
Of course. The episode 1 was very, very good. I think so too. Would you like me to go first?
Yes, I would, because it's only right that you go first. It is your show after all.
I think of it as our show, Mr. Taylor, but I will seize the initiative. I will grab the conch shell from you, and I will go first. All right, my first one is Kato, Kato. Very early stage startup, but what they're working on are voice agents for early stage collections. And I picked them because, Mr. Taylor, I wanted to talk to you about voice agents, given that I know this is probably an area you spent some time thinking about or at least looking at. But essentially, what they do is leverage all of this exciting AI technology that we have today to create interactive voice agents that are integrated with your servicing system. So think something like Loan Pro, and integrated with your CRM, so something like Salesforce. And essentially what it does, if I'm understanding their website correctly, is they use sort of interactive generative AI powered voice agent technology to map the intent of inbound calls from customers, right? So if you think about your classic like IVR experience, you call in, you get the IVR menu where they try to find out why you're calling. And the worst part by far is, say 1 if blah, 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 say 2 if blah, blah, blah. And you say 2 and they're like, we didn't quite get that. Can you say it again? Like getting to the menu of where they need to send you is a nightmare, to the point where, honestly, I don't know if you do this, Simon, but I will intentionally not call unless I absolutely have to, because I know that they're going to drag me through this IVR experience and it's going to be horrific. So instead of that, imagine that you have a phone, you call in, and they just say, "Hey, how can we help you?" And you just talk. You just say whatever the problem is, and however you would describe it, however you would phrase it. You don't need to know
Oh,
any magic words.
yes.
You don't need to know the menu. You just say, like, "I'm calling because I am worried about being able to make my next payment." Great. And what it does is it uses that ability to understand natural language powered by these foundation models to then map what they think you're saying against a very defined set of menu options, right? And so think of it as sort of generative AI on the front and then rule-based systems on the back end. And then on the back end, they will then use a decision engine to figure out, okay, which path do we send you down? Okay, we think it's this. All right, so here's the response we want to send back to them. It's a very structured response, so we know exactly what we're going to say to them. There's no like risk of hallucination or anything weird happening. And then that kicks off a really good interactive process with the customer where, again, I can respond using natural language. They can map my responses. And then I either end up talking to a human being if that's the right approach, or I resolve it in an automated fashion with the system if we can do that. But there's none of that, oh my God, they don't understand what I'm doing. I just hang up because I'm frustrated. And so I like this. I think that in particular, applying this to early stage collections intrigues me because, I've spent some time working in that space in the past. And one of the things that's really interesting is early stage collections is often sometimes discussed as like pre-delinquency, right? So it's like they're pre-delinquent. And until you cross that magic threshold from pre-delinquent to delinquent, we really don't have a lot of interest in like talking to you or expending resources trying to track you down. And that's problematic from my perspective, because the best approach to collections is proactive, right? Like you want, if someone has a question or a problem, or they're slightly anxious about being able to make their payment next month because some unexpected expense came up or they lost their job or whatever, like you want them to call you. You want them to be proactive. You want to put a payment plan in place. You want to restructure their obligation in some way that makes sure they can stay on track. You want them to do that. And the thought that there might be some percentage of customers who want to call you but are afraid to because they're going to have this horrific experience trying to get to a live person and explaining this, any percentage of those people who are dissuaded by a bad IVR experience, those are people who are just going to show up later in your collections process and take up resources that shouldn't have been expended on them in the first place. So this is, I think, a very interesting way to address that challenge.
Ooh, you probably heard the audible like sound as you
I
got to the
did.
business
Yeah.
case right at the end. Like
Yeah.
that was you last time we were recording. Now it's me. I'm like, okay, the penny just dropped. So in my banker days, and I am a reformed banker,
Yeah.
telephony was a channel. That's the most banker sounding sentence I've said in a while. I feel a little bit dirty. But telephony as a channel had the IVR channel, and the IVR channel was expensive. And so what we were trying to do is minimize the time that agents were spending on the phone and divert as many calls as possible. And that is just wrong for collections, because with collections I want to catch somebody because the business case is obvious. If I catch them early and I can set up the payment plan, they're more likely to pay rather than becoming delinquent. This is OHAD
Yes.
and TrueAccord, what they've been trying to build for quite some time as software, but just with a better IVR. Because when you start talking, I was like, this is a bit niche. And I sort of wonder, like, isn't voice agents for IVR an interesting category? Yes. But if I'm doing collections, the intellectual property and the smarts here is really in the TrueAccord stuff. It's in how do I talk to the customer? How do I make that work with the underlying workflow? So have they done anything on that space? What's the founders' backgrounds? Like, how much do you know that can make it seem like these guys have got a shot? Or is this just they started here because there's a business case? Like, what's the thinking?
That's a great That's a great question. I mean, I do think the business case being in collections to start is smart, right? Because like to your point, you could make IVR better everywhere, but there's not going to be the same incentive to make IVR better everywhere. And so doing it in collections, I think, is a smart place to start. I don't know what the founder's background is. And so I think that is kind of the key question is what do you layer on top of this in order to make not just the IVR part smarter, but the collection treatment part smarter as well, right? And there's always, whenever there's something that touches collections, there's always a decision engine sitting somewhere behind the scenes. And my understanding is these guys do provide that decision engine that can help you sort of waterfall which treatment do we want to do, what path do we want to send them down, do they need to talk to someone, and the Gen AI is just sort of the interface between the customer and that decision engine. But to your point, and it relates to TrueAccord, there's a lot of other fintech companies that have kind of poured into collections over the last, 2 to 5 years, which is great because it's a space that really needs it. There is a IP that you build up over time, knowing how collections works and what works, and being able to talk to collections people. And I will say, having gotten to know TrueAccord, there's a company called CNR Software that actually used to be owned by FICO back in the day, that's since been spun off as a separate company. There are folks who have a much, I would imagine, greater depth of expertise here. And so I wonder, is this an acquisition target? Is there a partnership to be built here? Will these guys stay in collections, or will they try to take their, we make IVR better and expand into other parts of the customer service or servicing ecosystem? They do, I think, have an integration with Loan Pro, which is one of the loan servicing systems out there. So I think they're at the very early stages of trying to figure out where they expand.
Yeah, interesting question. Because the thing I thought about as well as you were just talking was, is it generic or are they going deep? And if they're going deep, partnerships certainly help.
Sure.
But there's a company called Sierra by the guy, I think it's Brett Taylor, is on the board of OpenAI and is doing all the
Oh, sure.
podcasts at the moment. And Sierra is like chatbot as a service, like good chatbot as a service. We'll come in, we'll make it make sense for you. We're built on top of OpenAI. I'm a board member. I got this figured out. By the way, I built Google Maps. Like I've been in Silicon Valley. I've done software. It's a pretty good pitch. It's compelling.
Oh, yeah, for sure.
I will buy some of those, please. And I thought about that, and then I thought about how would they implement it. I also thought about Klarna. Like, what would Klarna do with this? Because Klarna is not missing an opportunity to tell you how many staff they've let go of because they have an AI thing now.
No. We don't need Salesforce. We don't need any of these things. We're ripping it all out.
Well, let's get rid of Workday. Let's get rid of humans. To be fair, the CEO did recently do a thing that was a deep fake of himself and said we don't need CEOs anymore, and I was like, that's quite self-aware. That was all right, but it's like people lose their jobs like this.
Yeah, it feels a little weird.
It does. So yeah, is this? And I think this is the question for financial services generally, which is, are AI agents in this space? Like, where does the really gnarly regulated stuff and the built up IP become important? Or is it something where I can just start to give them the documents and the history and access to the tools and they'll figure it out? My gut says, having everything I know about financial services, says every time you try and apply a generic tool to it, it goes wrong and somebody ends up losing all their money.
Yeah.
But I could be wrong, especially with things like IVR, where it's just like, what are you using this bot for?
Well, and I think the artful part to it, just to put a capper on this, is where do you draw the line for where AI can help, and then where do you draw the line for like, okay, we could use AI here, but we would open up a whole can of worms that wouldn't be worth the cost we would pay. And that to me is the art of applying it in financial services, and it's why I like this idea of AI for understanding intent, but mapping the intent against a deterministic set of rules. Like, to me, that feels like the right place to draw the line at the moment. Now, I'm always cognizant of the fact that if we're going to spend $10 billion building the next frontier model, and if the laws of scaling for performance hold in generative AI, like, we could all be out of a job at some point with this stuff. So like at a certain point, these models might be truly capable enough to do a lot more of this and make people feel comfortable. But where they are right now, it feels like that type of art of blending these two things together, that's really what's going to make the product work or not.
Let's see. Let's see, my friend.
All right, Mr. Taylor, your first company, please.
This is FlowX AI. This is Gen AI agents for bank digital transformation, which wins the buzzword of the Salad Award. But
it really does.
Go with me. Just stay with me here.
All right, I'm staying with you.
FlowX helps institutions modernize their apps, upgrade infrastructure, and change internal processes. And then the trick here is they've built what a lot of people have built, which is this like integration layer like Uncork or UiPath that sits above your legacy systems and lets you do new things and build new workflows. But where this is different to classic RPA is they can take, let's say you've got a design team. Your design team outputs a Figma of a new product you're trying to build, and then it starts building all of these little subtasks for other AI agents. So, workflow agent, go build me the workflows. Front end developer, go build me the front end. Back end developer, go build me the back end. Tester, build me a test script. Engineer, write some code. Compliance agent, ensure that all the laws that would apply to the development of this screen are correctly applied to the development of this screen. Ooh, that's what caught my attention. And it's already used by some very large global and European banks, and now they're expanding into the US. So I'm just like, the skeptic in me is like, there's so many buzzwords here that I want to dislike it. And you could get traction from the buzzwords alone. But the realist in me is like, companies like Backbase did really well out of being the digital transformation will just layer over the top of your legacy type of thing. And in the past decade, banks have spent billions trying to modernize and move to the cloud. And this could help at least with some of that lift. And if I think about what the big banks are trying to do, they're all trying to figure out, how do I get to the unit economics of Nubank? How do I get to the feature velocity of Nubank? And I'm not going to do that with my legacy systems. And the guys at Nubank will be just adopting new tools. Yeah, okay, there's a really cool coding copilot and there's a really cool this code. Let's just adopt it. But for a bank, that's a lot harder to do because all of their legacy infrastructure stack, you can't just adopt like the latest new coding tool and the latest new workflow builder tool and the latest new AI, whatever, because it wasn't built to throw away like the modern stacks are. So the business case here really stood out to me. The team seems like they've really got their act together. It is possibly the most perfect pitch for digital transformation I've seen. And yet, all of that makes me skeptical. What say you, Mr. Johnson?
Well, I like it. I mean, I think just the general idea of like a UiPath or a Backbase, but AI native is sort of just a good place to start as a pitch. Because I think a lot of the unfun, difficult, yucky work associated with being that sort of layer that sits over the top of legacy systems inside of a very large bank can be made 1,000 times more efficient, more intelligent by layering AI in a more native way over that. And I'm sure, UiPath and Backbase, like they all have their AI story, I'm sure, nailed down by now. But as you and I think, have talked about, there's a very big difference between your product being sort of natively built around these new capabilities versus trying to kind of bolt them on. And so I think it can be super powerful. And to your point, I mean, one of the things that's interesting is every big bank has been working on this for what now, a decade plus, longer, probably closer to 20 years than 10 years at this point. And I think my intuition would be that there are probably a subset of those banks that are far enough along with what they're doing or have enough resources that, well, this is, I'm sure, intriguing to them. They might view it as like, oh, maybe we can borrow some of the ideas of what they're doing here, but we can do it
Yeah.
ourselves. We're far enough along down the path. Like if you're Chase or whomever, like there are probably a set of banks where it's like, like we kind of feel like we could do this.
Mhm.
The old Cap One model where like maybe they invite you in to demo your stuff and then they just rip off all your best ideas and do it themselves.
Yep.
I do think there is that segment of the market, but I do still think there is a very large segment of very large banks that have been spinning their wheels on digital transformation, but practically speaking, haven't gotten anywhere in the last 10 years, right? I'm sure they've spent a bunch of money with KPMG. I'm sure they've spent a bunch of money
Yeah.
with some of these new kind of middleware layers. They've seen a million presentations about how we're going to do this. But if you gave them truth serum, they'd be like, we haven't gotten anywhere. And like, practically speaking, we haven't seen any of the results. To your point,
Yep.
we haven't transformed our unit economics. We haven't transformed our feature velocity or the ability to ship products. Like, we're nowhere close to being where we want to be. And they, I think, would be a pretty good target for something like this, where you could basically, if I was doing the messaging for this, I'd come in and say, okay, it's time to stop pretending that we've been doing this and actually do it. And here's how we're going to do it. It changes the nature of our approach because it's AI powered in these different ways. We can have this layer that sort of sits intelligently across things. I like on their website how they have specific areas they talk about. I think one of the biggest things I get hung up on with digital transformation is if you truly approach it as a cross enterprise initiative, it's just going to take on too much weight and get sunk. Whereas if you say, look, like, we're not going to touch those other things you're doing. This isn't like even a CEO board level conversation, but like, just as an example, you've been wanting to move from siloed fraud detection and KYC to more of an enterprise approach just for that one function. Let's do that. And you've been trying to, it hasn't worked. Let's do that. Or let's pick out, AML, or let's pick out, a revamped approach to chatbots and digital customer service. Like, whatever the thing is, pick one narrow area or use case, but that has an enterprise layer required of it, and start there and attack there. And looking at their website, it seems like that's what they're trying to do. And I will, just to emphasize a point you made, I mentioned KPMG sort of tongue in cheek because they're listed as a company that these guys work with on their website. They have some big banks in Canada and elsewhere listed on their website. So they've clearly gotten traction with the types of people you'd want to work with on these types of initiatives.
Yeah, absolutely. I think there's two things that kill every digital transformation, and you sort of nail both of them, which is somebody tries to build the Death Star and it's never finished. You can't do the whole thing.
The rebels blow it up before it gets finished. Yeah, exactly.
you gotta pick you gotta pick something and win at
Right.
it. And the second thing is, the old consulting adage of why solve the problem when there's money to be made extending it is a smidge unfair. But it's the endless, digital transformation was the gift that kept on giving to that industry, and it's sort of going away because what happens here is these organizations are trying to build like the bigger ones. You mentioned Chase, I think about many others as well.
Mm-hmm.
Capital One, there are notable ones in Europe. I think about Santander as being one where you see inside these organizations and you're like, their tech teams are pretty savvy at this point. Like, they know what
Oh
they're
yeah.
doing. They're
Yeah.
playing
Yeah.
the long
Yeah.
game, and you couldn't just waffle them in quite the same way. They're kicking out the consultants, and if you look at the annual reports of a lot of these consultants, they're making a ton of money on selling Gen AI projects, but
Yeah.
everything else is dead. Like, digital transformation is completely gone, and yet the need for better unit economics is still very much there. So that's the North Star, is like, can I actually go deliver? The thing that most institutions don't do is go into their digital transformation program with a clear focus on what KPIs should look like when they come out the other side. So your second thing you mentioned was feature velocity. And so
Yeah.
are you hitting the feature velocity, and are you hitting your unit economics, and are you even thinking in those terms? Do you use those KPIs internally? Because every neobank does, every challenger bank does, every tech company does. And if you're not, then you're not going to know success if it smacks you in the face. So get that right, and then go have a really great conversation with somebody like this and their competitors and everybody else. So my question for these guys was, can they get enough mind share? Can they really show results and traction, or is everybody just going to come along for a POC? And then also, why doesn't Uncork build this or UiPath build this? They've already got traction. So I think there's some fairly standard questions there you could start to think about. So yeah, let's see where it goes, and let's see if it actually unlocks the new age of core banking as well. So, there's Thought Machine, there's 10x, there's Tomb, there's a few others. Everybody's trying to get off that legacy core, or at least migrate from it for some time. Is this the opportunity? Is it here at last?
That would be amazing if it were true. I think you and I have been around long enough to be naturally skeptical of that, having seen what we've seen. But it has to happen eventually, right? These systems eventually get upgraded. So no, I think that is a good point. I get a lot of questions about what you should look for when choosing a fintech partner bank. And at the top of that list are security, compliance, and operational resilience. As you know, I'm a huge advocate of building and scaling products responsibly. Nothing grinds my gears more than when companies move fast and break things. With Newline by Fifth Third, you don't have to sacrifice anything. You get the innovation of a modern developer platform with the stability and compliance competency of a leading bank. With an API-first platform, Newline enables enterprises to launch and scale payment, card, and deposit products directly through Fifth Third Bank. No annoying or expensive middleware layers to go through, just a secure and direct relationship with Fifth Third Bank. Find out more about Newline by visiting newline53.com. Can I give you my second company?
I would be delighted if you did.
Okay, well, then allow me to delight you, Mr. Taylor. My second company, which I just was fascinated by and I wanted to talk out, is a company called Mesa. And they were recently in the news for, I believe, raising a seed round. But they are, I guess I would describe them as built for homeowners. So where Built provides a credit card for rewards for renters, these guys are trying to do the same thing for homeowners. And I've seen a few different...
Have they ripped off Wells Fargo too?
Well, that's a question I have because, I get the concept, and Built is a very nice analog, I guess, for other founders to sort of go, we're going to do Built for X or Built for Y or Built for Z. And there are other folks I've talked to who are doing this. There are some challenges because they, what they say is they have a credit card that pays you 1% on your mortgage payments, and then also provides you other similarly sort of more generous rewards tuned to homeownership expenses. So they mention things like homeowners association fees, landscaping, utilities, like the things that homeowners spend money on. They want to make this the card for those people where they can get rewarded on those categories and sort of shift the conversation from travel and other things. Like one of the things they talked about is like a long-term vision would be maybe instead of redeeming this as like amazing travel rewards, you redeem it as a dad who's boring as a Costco membership. So you can go to the big box store on the weekend and, buy a new leaf blower or whatever. So they're trying to sort of...
Speaking my language now, man.
That's what I'm telling you. Like this is like FinTech Dad podcast. So I kind of feel like we're sort of right in the middle of their target demo. But as you alluded to, the unit economics to me is kind of the core question here. And my basic understanding of Built, and I will admit to not knowing the details, and I might get some of this wrong, but just like my intuition and my basic knowledge of Built is that it's a company that has benefited extraordinarily from timing and good luck, right? Because a lot of Built's model was built on, hey, it's the pandemic. Every landlord of big buildings in large cities became intensely freaked out that everyone was going to move or like not, renew their lease. And, oh my gosh, what can we do to offer our tenants some incentive so they continue to work with us? Oh, hey, here's Built, and they offer this thing. The only catch is that, we have to allow someone to pay their rent with a credit card, which we historically have not been wild about doing. Okay, we'll do that. And then On top of that, oh, hey, we're going to launch our own version of this credit card. We want to do it with Wells Fargo. Wells Fargo is also an investor in our company. They are willing to sign up for this deal that will allow us to extend our footprint of different properties that we can support while keeping this value proposition alive. Like, Build has been able to scale due to some really wonderful execution and very good negotiating and good timing. But I don't know that that means that they are a roadmap that is an obvious one for others to follow. Because if you don't have that good timing and you don't have that good luck, there's a very good reason why, we don't give people rewards on paying their rent or their mortgage with a credit card, because the person on the other side of that doesn't want to pay the interchange fee associated with that. And if you don't have someone like Wells Fargo picking up the tab for that, it becomes very, very difficult to do. And so I have obviously a big question mark around the unit economics. I will say, on the positive side, kind of going back to the fintech dad joke that I made before, I do like that fintech companies seem to be orienting more of their value propositions around what I would call more mundane but important parts of consumers' lives, right? Like, I've thought for a long time that, like, the loan servicing experience is horrifically broken. And one of the reasons for that is, like, your home is the most important financial asset you're probably ever going to own. Your entire life, like personally, socially, sort of from a just workflow perspective, it all orients around your house. Like, it's a core part of your life in every sense of the word. And yet, historically, we haven't scaffolded any great software around that. And so I do like the idea of having sort of call it an operating system for home ownership. And I could see a credit card being a wedge to get into building the operating system from home ownership. But in this particular case, I don't know how sustainable the unit economics will be to wedge your way into that home ownership operating system. What are your thoughts on this?
In the 2010s, a bunch of McKinsey consultants went to China and saw the future, and they called it ecosystems. And
Yeah.
in China, it's very common for the technology companies to wrap a whole series of financial products around a certain experience. So
Mhm.
the Redfin equivalent would be owned by the same company that can do your brokerage for your mortgage, that would sell you the insurance for your property, that would also sell you, the home association. And this is the idea of an ecosystem, also an
Mhm.
operating system. So that was
Mhm.
common because you just got this rapid expansion in the middle class, and there was nobody else to build it but the technology companies. So they just built everything,
Mhm.
and they grew
Mhm.
incredibly quickly, and they had demand, and they blitzed, and there was a great idea. And so every board executive in the late 2010s was asking me in my consulting days, how do we build an ecosystem around X? How do we build an ecosystem around Y? Should we be building this? And my answer was exactly what you just said. What's the wedge? Because
Mhm.
in our markets, you're not entering a blank space with tens of millions of new customers entering every year. You're entering a space where it's highly competitive. People already have products, and there are already pieces of what you're trying to build out there. So it's very, very different. So you need to buy the permission, and you need to give somebody a reason to use your product. And maybe that 1% is it. But honestly, sitting here thinking about it, like, if I could have 1% cash back, and I could use it towards some stuff that I've got as expenses, it's like, all right, but I got an Amex Platinum. Like, what? That's just the same. Like, why?
Right.
So, what's the right to win? I guess is what I'm sort of talking about here.
Yeah.
Because I love your broader theme about go after the stuff that really matters. Go after the big
Mhm.
line items on the household P&L and go make a difference for me there. And what I want to
Mhm.
see is somebody building an ecosystem around the admin. Gen AI, for the love of goodness, there's so many bits of paper.
Yes.
Get in there and
Yes.
get some of the admin, especially around home ownership, especially around insurance documents, especially around all of that. So I who knows? Maybe those guys will get there. Maybe this has got more of an obvious instant business model. and I wish them well. But it's an interesting question. Like, how many people are trying to build a built for mortgages and a built for homeowners right now on the back of built success? I really wonder. So, would you start somewhere different? Would you go somewhere else with this?
Yeah, I probably would. I mean, I think one of the challenges, and I'm sure you see this all the time because you talk to a lot of early stage founders, is we're real big on like pattern recognition, right? Because I think everybody is looking like everyone wants to be able to explain their idea simply, right? And so if you can say we're built for X, we're plaid for Y, we're ramp for Z, it's just as easier to explain it, particularly to investors, I think. And I sometimes hang this on the neck of investors who, are not always great at grokking like first principle ideas when they're pitched to them. And so they tend to like to have like an analogy or a way of like bucketing like, oh, okay, great. We've been looking for our own built and you're built for us. So we're going to invest in you. So I think there's this weird dynamic between founders and investors that encourages a certain amount of kind of copying, right? And I think to
Yeah,
your point, the challenge I have with this is I just don't think credit cards are a very good wedge product anymore. And the reason I think that is kind of twofold. One, the card is really difficult to stand up, right? And there's a ton of competition. There's a ton of compliance and costs and other things that go into it. And it's just very, very difficult to sort of stand up something that's going to your point, be better than Amex Platinum or be better than Chase Sapphire or be better than Built, right? Like standing up a new credit card that people are willing to compare. Consumers are pretty mercenary about credit cards, right? Like they buy credit cards very differently than they buy other financial products, I think. And so it's just a very, very difficult place to start in, particularly again, if you're using rewards as the reason why, right? Like we're this card and rewards are the reason why. And I almost go back on the B2B side to kind of the distinction between like a ramp and a Brex, right? Like in the early days, the model on like the Brex side was we're going to give you back all of the points or the rewards or the interchange, right? Like we're going to give you these rebates and these discounts and whatever. And it was a very sort of monetary way of grabbing market share at the beginning. And I've always been more a fan of the ramp model, which is look, we have a card, but the card's not the point. The point is the software, and the card is just a data integration layer that makes all the software bits work. And I kind of wish that someone would start there from a product perspective. And I'm sure that when Ramp was getting started, they probably had a slightly harder time explaining their vision and what they were trying to do. Because when you're building a software product that doesn't exist, that should exist, that's going to do these things that we've never really been able to do before, it's a harder pitch, but I think it's more valuable. So if I was starting in this like homeowner operating system, homeowner ecosystem standpoint, I think it's more of a software product where maybe the monetization bit is the card, maybe there's a financial services component, maybe there's lending, maybe there's insurance, maybe there's other things, but I'm a software company shipping software products. I'm not a credit card issuer. Does that make sense?
it completely makes sense. I'm very much of the same school of thought, which is the jobs to be done for customers around the financial product are the most underserved and the highest opportunity. So you will always do reasonably well if you compete on price. And if you have some advantage in terms of your unit economics, like a generational shift in cost capacity that came from cloud and mobile, for instance, then you can go compete on price and maybe you can go serve some people. But then eventually, let's say everybody's figured that out, like Brex has come along and done their thing, that's been figured out, and they're even building pretty decent software. How are you going to
Absolutely.
compete? Are you going to compete on price? Well, no, you have to be competitive, but you're not going to win because you're smaller and you don't have the returns to scale yet. So you need to compete on product, and you need to look for those painful jobs to be done that are immediately adjacent, the adjacent possible that is right next to the task that is paying or receiving money or the expenses and all of that sort of stuff. And then you need to make it magical. And if you can do that, then you get that traction flywheel really humming and do it really, really well. So, I have the angel and the devil. On the one side, the angel saying, build great software. And on the other side, it's like, well, Robinhood just won with like a really slick app, sure, but it was like it's zero fee because they were doing something else. So you
That's right.
you absolutely can win with that. But I don't think that's
Mhm.
how you win in the home ownership space, because home ownership unit economics, credit card unit economics, very difficult to win in those without any sort of scale against a Chase or an Amex. I just don't see it.
It really is. I mean, it's. I think built success in a way has been a disservice to the ecosystem because it's like, oh gosh, credit cards are a totally viable path, and it's like I give Built a ton of credit for carving out a business where no one thought they could, but. In some ways, I think they're the exception that proves the rule more so than like, oh my gosh, this is an entirely new category we can attack. So be curious to see how that one evolves. Mr. Taylor, your final company, please.
Yeah, my final company is Cavela. So again, it's an AI company, so bear with me.
Kind of a theme here, yeah, today.
Yeah, it's kind of
It is.
it's the way fintech has gone. It's the way everything has
Yeah,
gone. Who knows?
yeah.
Now that SoftBank has invested in OpenAI, I think
Mm.
we've hit the top. We're on our way down. We'll get normal fintech again soon. The bubble might be finally ending, but let's see. But I really like this company. So, Cavella helps brands and startups source suppliers for wholesale goods like clothing, cookware, or beauty. It's a conversational interface that manages hundreds of quotes via emails and PDFs and pulls them into a simple summary. It handles price negotiation and claims to save, on average, 40% versus existing suppliers without impacting quality. It can then even handle ordering samples and little bits of quality control with third parties or freight forwarders or whoever else. And I was like, holy crap, drop shipping, just the game just changed. This is
Yeah.
really, really interesting. How many people work at a startup and have had to buy swag and have just gone to what they found at the top of Google, not the best
Oh yeah.
quality and not the best thing? Ooh. So this like procurement AI agent thing was really, really
Mm.
nice. But Alex, you know where my mind went? I like this, but wouldn't it be cool if they embedded finance too? Like it's
Oh
cool
yeah.
by itself, but having a team who does that is kind of what most businesses do. And then the next thing they do is actually buy the thing. But why
Hmm.
wouldn't you just monetize this with embedded finance? Like, I'm going to help you find your supplier and then your
Yep.
invoices and then finance those invoices and everything else on the supplier buyer side. Like, if you've got
Yeah.
suppliers, you've got buyers, you could kind of go that other way. And we were just talking about spend management. They've all gone that way. Like the
Yep.
biggest growth area for a lot of those card spend managers is AP and AR. Like that's where the
Hmm.
action is right now, and trying to make
Hmm.
that go international and all of that sort of stuff. This might be the way to do it. And in fact, I think even Ramp has a feature a bit like this, don't they? Where they claim to do
They
some of
do
this stuff.
procurement.
Yeah, yeah.
Yeah, yeah, yeah. No, no. I mean, it's exactly right. I mean, it's funny, right? Like we were just talking about adjacent software solving jobs to be done. Like sourcing and procurement is a huge one, right? And it's such a funny thing because again, like the weakness of banks in terms of competing in this new world is they draw a line in a specific place and they're like, well, we're not gonna compete at anything that's not like strictly a financial product, right? So it's like they're like the water stops here. This is
Hmm.
the water's edge, and we're not going to go any further than this. So like we're gonna help you pay for the stuff you're buying, but we're not going to think at all about how you buy what you buy and is there inefficiencies there that we can help with. And this is a pretty cool example. I mean, using AI to sort of, I mean, it's funny. Frank Rotman came on the pod a long time ago, and one of the things he was talking about with AI was discovery will be perfect in the future, right? And what he meant was you're not going to have to spend any cycles with human beings looking for the best whatever in the future, right? AI is just going to find it. So, like, if you need to source materials, if you need to do any type of procurement, if you need to shop for anything, you're going to have an AI agent that's just going to do it. And discovery and pricing and negotiation is all just going to be automated and it's going to be perfect. Well, if that's true, then you probably want to be the one who builds that bot or that agent that is doing that process for a company. And then to your point, yeah, I mean, I think we've been embedded financed pilled, Simon, you and I, because we probably look at everything and we're like, you could jam embedded finance into that. But I totally agree because like you have buyers, you have suppliers. I would think actually one of the things that'd be kind of cool in this case would be, could these guys underwrite the quality of the buyers for suppliers, right? So they're going out and finding all of these suppliers and sort of assembling a supply chain for new buyers. Well, from the
Hmm.
supplier's perspective, they don't know these buyers from a hole in the ground, right? They're probably small companies or individuals or people they wouldn't want to negotiate with. Okay, so now you're selling to these guys, hey, they asked for different terms for buying this thing from you than you would normally feel comfortable giving them. But oh, this company, they're the ones who actually brought us to them, and they're saying they can underwrite the buyer and essentially guarantee the quality of the buyer and that the buyer will make payments, so they can allow the suppliers to extend better terms. So there's a very sort of two-sided network ability that you could spin up here using finance as the key to do that.
Well, and if I was a global trade finance bank, I'd be all over this. This is like,
Oh
what's
yeah.
the one thing that's impossible to do if you're a trade finance bank? Small business trade finance, because you can never make the unit economics work because there's too much
Right.
paperwork. AI is the natural place to go with this. And there's been companies like TradeShift and others that have done a pretty decent job with the optical character recognition and dealing with some of the PDFs and the shipping documents. But now we're at a point where that works most of the time. So
Hmm.
another famous VC, Angela Strange, says own the upstream when she's talking about all of the
Right.
PDFs and the emails and the communications. Like the obvious wedge for generative AI is to own the upstream, own all of that nasty unstructured data and comms and communication tennis back and forth. And this is a really great example of that. But it's an example where the big banks still manage all of global trade, and they could play here. Or now this is my wild idea. Who's going to build the next trade finance fintech? Like who's going to go do trade finance? Because I always thought that like trade finance was the sleepiest of sleepy backwaters in fintech.
Oh yeah.
It's the one where like people got to the office of the CFO, people got to accounting, they've not got to trade finance. Trade finance, oh my goodness, trade finance has documents that are still in use that go back to the 1600s. Like this is a wild place, my friend. But yeah,
Yeah.
everything that you see around you probably came on a ship from an offshore place. The microphone you're using, the hat you're wearing, the T-shirt you've got, it all came through some sort of trade finance. So
Hmm.
that is an important thing, and we should solve it. And maybe the caffeine's hit, and I've decided that Cavella is going to change the world.
I love it. I love it. Well, it's funny. It's funny to think that depending on depending on the order in which we talk about these companies, someone gets like the really optimistic version of Simon because the caffeine hit his bloodstream, and he's like, "I love this. This is amazing." But no, I genuinely do think this is a very cool way to attack kind of an interesting area, and it's funny, right? I mean, if I was someone like a Shopify, as an example, I would look at this and be like, ooh, that's interesting, right? Because we have a whole bunch of sellers on our platform. We've toyed with owning parts of the logistic sort of infrastructure behind all of this stuff to varying degrees of success. How can AI allow us to sort of own that without actually having to own every part of it? So there's a lot of different places and different players in the ecosystem that could plug something like this in, and I think be very happy with it. Simon, before I let you go, can we manifest a couple things we'd like to see?
I think we have to. Now is the perfect time.
We have to. Okay, I'm going to go first. And in keeping with our AI is eating fintech theme, I have an AI one for you. But
Hmm.
I recently wrote about sort of questions that regulators have about the future of AI, and
Huh.
one of the ones is just, like how fair is AI? How explainable is AI? And it's interesting. I mean, SoftBank gives OpenAI $6 billion, and now we're off to the races in terms of the next frontier model being built, and we can afford to build a nuclear reactor to power our data center to be able to get all the compute we need to build this incredibly powerful model. The challenge, of course, is that the more powerful we build these models and the more data they're trained on, my just general assumption is the harder they're going to be to explain, right? Like we're not going to know exactly how they're making the decisions they're making.
Ah.
However, you have seen, and I think you wrote a great piece about this where you referenced this, OpenAI has also developed a different track for building out the sort of performance of their models, which is this O1 model that they introduced, right? And my basic understanding of it is that rather than scaling its performance by looking at a broader set of data, which they're also working on, they have figured out a different way to scale performance, which is let the model think for longer, right? So instead of trying to rush to give you the fastest possible answer, the way this O1 model works is it basically forces the model to do every part of the process sort of in almost a recursive fashion where it thinks through every step. It explains kind of step by step what it's doing. And what they found is that it actually does perform better, particularly for very sort of narrow, highly technical tasks like doing math problems and doing like very sort of hyper specific, very technical like tests and assessments that their traditional model doesn't perform as well. Turns out that taking your time and thinking, much like it works for a human being in certain contexts, also works for these frontier models. My question, Simon, or the thing I'm maybe hoping to manifest a little bit is, could this model takes longer to think be a way to sort of improve explainability and improve just sort of like the inherent fairness of the model? Like if the model itself is trying to explain to itself every step that it's taking, could that be a framework for leveraging explainability and bringing more sort of regulatory comfort? So is there a future where we let AI do things that we're not as comfortable with today because we don't know how it's working? And the trade-off is we wait a little bit longer. We let the model think for 5 minutes or 10 minutes or whatever it is, but the output is something that we feel more comfortable with. Is that possible?
Yeah, well, it would shift the cost from training to inference. That's what O1
Right.
does if you've ever used it, right? Like it sits there and you can like click the little button and watch it talking to itself. I think that would do a
Yeah.
pretty good job of tricking you into thinking you understand what it thinks it's doing, if indeed it does think.
Which might not actually be true. Mm-hmm.
Which, yeah, no, what you're actually seeing is a series of prompts on the underlying model, like adjusting each other in real time, but they're still
Yeah.
not explaining how any of that works or how any of that's been gotten to, or what
Mm-hmm.
you might want to see is exposure of the underlying system prompt. But I do think you've got something with this, like, what will it take for us to trust it? And in fact, you did write a great piece about regulators' questions, so I decided, inspired somewhat by that, to ask the question, how do we make consumer AI agents go mainstream? Because we want that future where the agent switches your deposits to the highest rate, it switches your utilities to the best supplier, and it's buying the best investments for you. It's like your agent. It's not the banks. It's not supplied by the bank.
It's working for you. Yeah.
It's working for you. But as soon as you start to unpack, all right, but what is it? Is it a joint stock company?
Mm-hmm.
Is it you? Is it yours? Is
Mm-hmm.
it property? You start to think like, whoa, that's hard. And then how do you know it's got the human's best interests in heart? How do you ensure that it's
Right.
not harming consumers? And how the heck do you even regulate the thing in the first place? So turns out Australia has had a go at it. So
Hey.
yeah, so Australia has pushed a new piece under its consumer data right, and it has a new category called action initiation. It allows AI agents to act on behalf of consumers to switch energy suppliers or move mortgages to a lower cost provider, and they've got a whole framework for it. So I'm gonna send you this draft before the world gets to see it, because I'd love your input on it. Because to your point, I'm noodling with the same question. What will it take
Mm-hmm.
for us to let go and dance with the AI, to really trust it to do the hard stuff in finance? Because everybody right now is like, yeah, I can use it for this little back office thing and I can use it for that little thing, but I don't really want to have it do the hard stuff just yet. I think there's a way we can get there, or at least let's have the conversation about how and not about if. That's what I'm manifesting.
I absolutely love that, Simon. That is a great place to leave it. Make our wildest AI dreams come true, people. We would really appreciate it. Simon, I'm seeing you at Money 2020 soon, so we'll be together in person, and maybe next time we chat, we will have even more exciting companies and ideas to share. But until then, thank you so much for the time.
Bye for now, and see you on the panel with Jason, our exclusive panel on embedded finance and bank partnerships. See you there.
Should be fun. Thank you for listening to this episode of FinTech Takes. Stay up to date with emerging companies and the latest FinTech trends by subscribing wherever you get your podcasts. And if you love FinTech Takes, please tell a friend.